Good morning, everyone, and welcome to our webinar. Again, this is Courtney Austin, the marketing coordinator here at AIM. Today's webinar will be recorded, so everyone is automatically muted so that we can get a quality recording. It will be posted on our website later this afternoon. If you have any questions, since you won't be able to ask them during the webinar, please go ahead and post them in the chat box, and we will have one of our marketing team follow up with you after the webinar concludes. In the next couple of weeks, we have a couple more webinars coming up. Next week, we have Mutual of Omaha's optional LTC riders on the 22nd at 9 a.m. And then on the 29th, we are hosting a guide to Mutual of Omaha's long-term care e-app. So with that, Mike, I'll go ahead and hand it over to you and you can take it away.
All right. Thanks, Courtney. Appreciate all that. Courtney does a great job of pulling all of this outbound material together, coordinating all of the behind-the-scenes stuff that happens so that we're able to put these webinars on, getting the registration material out to agents. She coordinates getting agents, the late-running agents and the ones that are struggling with the technology. She coordinates taking care of all of that as well. So she certainly does a great job with that behind-the-scenes piece. And if you've ever had to get help trying to solve some of the technology issues, you probably dealt with Courtney. She's great at what she does. So thanks a lot, Courtney. It's been a great year. So, tax strategies for small businesses, specifically long-term care tax strategies. This idea changes the conversation for you, and it helps you change the conversation with your clients. And there's a lot of agents who, because of the crossing over of different lanes that they traffic in, there's a lot of agents who work with small business owners. And this helps from several different perspectives that we're going to talk about here today. So the tax idea is one piece of it, but it's important to understand we're going to come back around to some core elements of ongoing conversations that we've had and different webinar presentations that we have made, okay? Because it's important to change the conversation, and we'll touch on that more in a minute here, but it does come back to some things you've heard us say before, which is you're gonna be pretty much the only one talking. When you go talk to your client, Bob Davis, who runs a plumbing business or a landscape business, you're gonna be the only one offering to help him in this way. And not only are you offering to help him cut his tax bill down, okay, but you're offering to take care of his employees in a way that is valuable to them and that no one else is doing. And that circles back around to this central idea, protecting the American dream. It's what we are as an industry. It's what our firm is involved with every day with you. It's what our marketing team, Don and Anthony and Nick and Carlos, it's what we're involved with all of you all of the time. And as we go through this, okay, the programs that we're going to make available to you, depending on the size of the business, it's not what quote unquote group long-term care was 10 years ago, okay? Hence the reference. It's not your father's work site. It's a different thing. But there's a lot of benefit to that, to it being different. There's individual choice at a much higher level than there was before. There's the opportunity to bring spouses on board. A lot of different things can be done, and it gets back to protecting these folks. And this is part of the business owner's dilemma. And there's stories all the time. I was just on a news website a few minutes ago. It was a significant, what I'm going to call ongoing story about this first item here, this struggle to keep good employees. I originally presented this webinar to a large agency that we have worked with for about 15 years. I made the original presentation on this about January 10th of 2020. So let's call that 8 weeks before all hell broke loose with COVID-19. Okay, and all of these things that we're talking about here centering on this struggle to keep good employees, that only got more difficult after I made this original presentation. But we felt this was of significant enough value at that time that we wanted to make it available. We wanted to change the agent thought process. We wanted to change the conversation and help agents change that conversation. And now it's just gotten more difficult and more complex, but we've already got a head start on it. Okay, so struggle to keep good employees has always been difficult. One of the key things that can be done that helps both the business owner and the employee centers on this idea of changing the conversation to talk about benefits rather than talk about premiums. This opportunity to compensate these employees and also protect them does mitigate the tax burden. There's a second tax burden coming up that we'll talk about in a little bit, and there's another piece to this that ties into connecting or protecting the American dream that we don't touch on very much. Most companies of any size that have a 401k plan, there's some type of matching within that structure. Okay, those funds are virtually always 100% vested upon deposit. If they're depositing them once a quarter as part of their 3% or 4% match, that money becomes available to the employee immediately. All right. If something happens, if something goes wrong without benefit of long-term care, that 401k plan is virtually certainly or a differentiation of that, a 403b, something like that. That plan is where that employee is going to go to pay for care. So you're not only protecting the employee and their version of the American dream, but you're protecting an additional business owner investment in the employee, which is those 401k or 403b, however they're structured, those matching funds. Okay. This has the added advantage of mitigating the tax burden for the employer. This allows them to deduct, depending on the structure of the business, and I'm not a tax guy, so we're not going to get into a lot of detail stuff there, but it does do this. It allows them to deduct, in most cases, the actual premium, the total actual amount for all of the employees. Whatever amount of that is paid for by the business owner, that amount can be deducted off their taxes. That means rather than paying Uncle Sam, and in some cases paying their state that they live in, if you're in a California or in New York, okay, you're able to not only protect these employees, but you're able to change that where you direct those funds, rather than directing them to some sort of government entity, which a lot of folks are tired of doing that, okay? Rather than directing it towards a government entity, you direct it back toward your team, the business owner's team, those folks that he relies on to build his business and keep that business moving forward, okay? We've got documentation specific to that. It's what we call the tax advantages for business owners flyer. If we've got you contracted with us, we'll be glad to make that available, and we'll talk about kind of the takeaways, which include contracting and getting current in that area. We'll talk about that towards the end of the presentation. The last part of this business owner's dilemma comes up with this second tax burden, okay? In the aftermath of Washington's LTC trust tax, and that's a generic term. They have some fancy name for it that's a bunch of crap. But yeah, in conjunction with that particular effort this past summer, what we saw was a significant interest in the part of business owners to help their employees not have to pay this additional tax. It solved all these other problems as well, but at a level that we never contemplated would occur. The business owners were willing to undertake some required expenses on their part to make worksite programs available to their teams. And they were doing that specifically to keep their teams from having to pay this tax. It also had the advantage of keeping the Employment Security Department here in the state of Washington, it had the added advantage of keeping those folks out of their payroll operation. It meant that the payroll person at a particular company had one less thing to deal with. And I know a fair amount about that because my wife is the CFO of a large medical operation here. And I know that with the number of employees they've got, just that interruption and that paperwork that's going to be required for that would just be one other pain in the rear. Okay, so if you're in Michigan, if you're in Oregon, if you're in Colorado, Illinois, California, this is something you want to get ahead of, because once it starts, it's going to be a tsunami the likes of which you can't imagine. Okay, but you've got time now to start having that conversation with folks. And you've got the time now to get their attention and get them to start thinking about this process, all right? Where we end up with this as we move along is somebody's going to get the money. Business owners are, like a lot of folks, they're fed up. They're fed up with paying taxes. So you give them an option, and you give them the option to direct the money towards their employees, many of whom are very highly valued for their skill set, their loyalty, their time and grade in terms of helping Bob Davis, the business owner, get that thing rolling, okay? And it gives them the option to give them to those employees rather than to give it to Uncle Sam. So part of this business owner's dilemma that we talked about, I went backwards, there we go. So, dang it, there we go. So it's a choice. This is part of this idea of changing the conversation away from premium and to about benefits for these employees, okay? They have a choice, like we talked about before. It does give them the opportunity to double down on protection. And what I mean by protection is protecting not only the 401k plan and those kinds of things, but just also protecting the investment in developing the skill set of a particular employee and their value to the company, and putting them in a position where they don't lose time because they have to transition over and become a caregiver, all right? Part of what you're going to need to do is know something about the business structure of the individual that you're talking to. So that's why we get into the idea here of knowing who you're talking to. And again, that the flyer that we've got, and their tax guy is going to know a lot more about this than the owner is, and he can go right to them and talk about how it's going to benefit them. You're going to want to understand the difference between eligible premiums and actual premiums. You want to be conversant on that, and we can help you with that, all right? And the other interesting thing that this does is it brings return of premium back into the game, because if you're going to take the time to put this type of plan together, the added expense, which in some cases can be very small for ROP, would mean that in the unlikely event that an employee is killed, that premium would be returned to the business owner rather than having those premiums go for naught. All right, so that's an interesting tactic that we haven't seen in a long time be available and have as an opportunity. So one of the nice things with this, because of some things that our carriers make available to us, is that the little guys can get in on this. Okay, it doesn't have to be a 100-person company. All right, that means you can have a company that has 5 or 6 employees, and they can use the common employer discount structure that a couple of our carriers make available. All right, again, depending on the structure of the company, as much as 100% of the premiums paid for the employees can be deducted. It's all just a straight write-off. Again, not paying Uncle Sam, taking care of benefits for these employees later. They would be writing that check to the government anyway. You're going to want to know, depending on the details in the state you're in. California is a great example where they have state income tax. You're going to want to know about that and how that works. And regardless of whether you have state income tax involved, it's still an attractive opportunity. It's still an attractive conversation. And it gets back to one of several different ways that we've introduced to you to give you the opportunity to start a conversation with these small business clients that you have. And most of the agents that we talk to know, at the very least, they know folks. Okay. In many cases, they insure these folks. And remember, we have detected for some time what I would call a high squeamish factor with our agents about initiating a conversation specific in the long-term care direction. All right. And I'm pointing this out because the people that we're talking about, they know what you do. All right. They know who you are. They know what you do. So if you initiate a conversation like this, they're not going to be surprised about that because it's what you do. And frankly, as someone who interacts with them at the very least a professional level, and in some cases it's a friendship level. All right. Because of that, and because of what you do, they're not going to be surprised at all if you say, you know what, I want to talk to you about cutting your tax bill down. That's going to get their attention. Okay. It's not, I want to talk to you about buying long-term care for your employees. You'll get to that. That's a plug and play solution. But when you talk to them and you want to sit down with them and their tax guy and talk about ways that they can mitigate that tax bill going forward, can't do much for 21, but you sure as heck can do something for 22 by starting that conversation. Okay. You're going to have their attention with that. They will listen to what it is that you have to say. Important to note here along the way, we aren't tax advisors, okay? We point that out because the folks that you're dealing with, these business owners, because of some of the complexities of filing business tax returns, they virtually all retain tax advisors. Those folks are going to know exactly what you're talking about. They're going to know based on how the specifics of the individual, the Bob Davis situation, they're going to know exactly how this is going to impact that. And if they have an additional employee expense of, let's say it's $2,500 a month to pick up premium for 5 or 6 or 8 employees, spouses are eligible as well. So you're talking about $30,000. Well, if that mitigates 80% of the tax bill that Bob Davis would be paying for 2022, that presents him with a great option, all right, because he takes additional significant solid care of his team, as I said before, and it also means that he's not paying an inordinate amount to the government. Most business owners are going to like that idea. Okay, they're going to be impressed with the fact that you thought enough to have that conversation. And again, it sets the stage for that second conversation about this tax thing that's coming. And there's a lot of chatter right now in Washington about repeal and all this other kind of stuff. But the thing you need to understand, the smell of money is in the air. Okay, somehow, some way, these different states are going to figure out a way to collect money from folks to help fund this social program, which is Medicaid LTC. Okay, Washington, that wasn't designed this way, but it turned out that Washington was the beta test. From some perspectives, it was an unmitigated disaster, clearly, but people are going to learn from this. Okay, they're going to learn from this. And when I say people, different states, Oregon, California, Michigan, Illinois are names that we hear consistently that are on deck right now. Okay, they're going to learn from this. They're going to go forward, and sooner or later, you're going to be dealing with the tsunami that the state of Washington and the licensed agents here dealt with, and that includes us. It was just insane, and it will be insane in Oregon, and it'll be beyond insane in California and Michigan, which are very population-dense states. If you get going now, you can get that piece off the table for the Bob Davises of the world and for their employees. Sooner or later, they're going to have to deal with it, and they will appreciate the fact that you don't have to set them aside and that you had time for them and you had the forethought of, to have this conversation with them now in 2022 to get ahead of an initiative that might come through in the last part of 22 or the early part of 23. Okay. And then the last piece, and it's a little bit of a country music homage here, the circle's unbroken. It brings us right back around to protecting the American dream. It positions you to do that for Bob Davis individually and his family. It also positions you to help him do that for his family. Okay. And if you're not having any other conversation with folks, that's a conversation that you want to be having with them. Okay. So takeaways from this. All right. If you want to start having these conversations and make presentations to folks, you want to take the time now before the licensing departments at Mutual of Omaha and at Thrivent and at One America and at NGL and all of these other carriers. You want to start getting the contracting done now before those licensing departments get swamped, number one. Number two, there are now significant compliance problems with an agent. I'm not singling anybody out, but with an agent going forward without having the proper licensure for that carrier in their state. Part of that licensure includes the partnership continuing education where applicable, and it also includes E&O insurance, okay? So you're gonna have trouble getting folks to make illustrations available to you unless you are appropriately licensed. The carriers, this is not the wild, wild west from 15 years ago. Everything's electronic. It's very easy to get this stuff taken care of very quickly. And the carriers' contracts, the agreements that you would have with carrier A or carrier Q or carrier R, those agreements specifically say that if you're not a licensed approved agent with them, you don't have the legal right to represent them. That legal right means you don't have the right to be out there waving around illustrations and soliciting business from folks. So we're giving you the opportunity to move forward. You'll hear the marketing team in the follow-up conversations that they have with you. You're going to hear them talking about what we call the AIM six-pack, which is a combination of our traditional long-term care companies, our hybrid companies, and the hybrid includes both life long-term care and annuity long-term care. We've got a great cross-section of 6 carriers. We do have straight up worksite opportunity available as well as part of that AIM six-pack. And we are actively efforting to pick up a couple more so that when we get into 22 and 23, we have the opportunity to take care of things and to move forward much more quickly. When Washington started to unravel in June and July of 21, we had to move very quickly from traditional long-term care into hybrids. But to do that, because we didn't anticipate it, we had to get everybody set up and make that transition. That's why we're taking care of that transitional stuff now in these states, the Oregons, the Californias, the Michigans of the world, and others, Colorado, et cetera. Sooner or later, you can anticipate that the state you live in is going to take some version of a swing at this process simply because it's a way that they can generate revenue to cover the cost of this very, very expensive program, Medicaid long-term care. If they don't do that 10, 15, 20 years down the road, we may not see it, but our heirs will see it. It will begin to bankrupt states. The ongoing cost will bankrupt the states. This is a great way for the states to offload some of that along the way, and that's what actually ended up happening in Washington. So that brings us to the end of our presentation here today. I'm going to go ahead and take a minute and unmute everybody. As always, we do ask that as we unmute, if you don't have the intention of asking any questions, if you go ahead and take a second and self-mute yourself, all right? And that way we don't get dogs barking and tea kettles whistling and people having sales conversations on a second phone line and things like that. It allows us to be a little bit more respectful. Quick reminder too, next week our webinar on Wednesday is Don Erickson, our other senior internal wholesaler. He's going to take some time with you and he's going to review the riders that are available on the Mutual of Omaha traditional product. So, all right, we're going to try to unmute everybody here. Looks like most of you have already self-muted, and we do appreciate that. Anybody out there with questions, go ahead and unmute and fire away with the questions. If we don't get yours taken care of here today, you will be getting follow-up phone calls from the marketing team here within the next few minutes. So go ahead with questions.
Hey, Mike, this is Dixon. I missed the first few minutes of the webinar, but could you just restate in just a nutshell what the problem is these small employers are going to be facing and how we can have a solution to help them?
Well, the problem, it's a good question. The situation they face is they pay taxes. Okay. And a lot of them are fed up with paying taxes, and they have an option now. We've had it for a long time, but we've circled back around to it. The choice they can make is they can either pay taxes or they can use some or all of that money to take care of their employees by virtue of purchasing long-term care for them. Depending on how the business is structured, will have an impact as to what percentage of that can be deducted. That does include the premiums for the business owner and spouse, and it includes premiums for employees of the business and in some cases spouses. But basically, you just give them a choice of where to send their money, whether they want to send it to some government entity, whether it be a state or the federal government, or whether they want to turn it around and use it to reward their employees, protect the employees, protect their investment in the employees. All right?
Is there a sense of urgency on this for employers to act ahead of the government?
Only if they want to save taxes. If they're perfectly happy sending a check to Uncle Sam every year, then no. But if they want to save money, acting now is the way to do it. That is compounded, as I noted here a few minutes ago, by the fact that in the Californias and Oregons and Michigans of the world, they're going to be dealing with this long-term care trust tax situation simultaneously. Every one of those states is going to have a massive capacity issue. And what I mean by that is agents like yourselves, you're going to run out of time to talk to people. Literally, you will not have enough time to set appointments with all the people that will be coming at you looking for help. By virtue of working with the people that you're working with now, you get them taken care of now, and you guarantee that you have the time to take care of them.
So if they act now with some planning that we can do through AIM Marketing, will that help them when the states adopt these new programs? Will it help them to avoid being swallowed by those new programs? Will they be able to avoid those programs somehow?
Well, their employees, in virtually every case, it's a payroll tax, which means that Bob Davis pays X percentage of his salary every week or 2 weeks or whatever it is, and all of his employees do that. It will position those employees to avoid that payroll tax when it comes home to roost in their state.
If they already have a program like long-term care set up.
Well, yes, exactly. Otherwise, they're going to be part of, the hundreds of thousands of people in each of these states who are all scrambling to try to come up with a solution. This puts them at the front of that by taking care of it now rather than waiting until it comes home to roost.
Okay, thank you.
Yeah, of course. All right. Anybody else with questions? Oops. All right. Just looking to make sure we don't have anybody else with their hands held up, anything like that. Okay, well, with that said, I'm going to go ahead and wrap this up. As noted previously, Courtney will work feverishly upon completion of this to, take it back. We got another question here. Hang on, Bruce, you are unmuted, so fire away. Question came up whether these long-term care initiatives would be guaranteed issue. Answer to that question, no. There is no such thing as guaranteed issue long-term care anymore. It's all at the basic level. It is individually underwritten. If you get into a worksite situation, you may pick up some concessions and some additional discounts as well. But the days of guaranteed issue long-term care insurance that is compliant are past. So good question. Appreciate that. Anybody else with a question here this morning? Or I guess depending on where you're at this afternoon. Okay. Well, Courtney, let's go ahead and wrap this thing up then. Appreciate everybody making their time available. Courtney will get this processed. She'll get it loaded up onto our website so you can circle back to it, revisit something if you had a particular question. The marketing team, Don, Nicholas, Anthony, and myself will be making follow-up calls with everybody to discuss any other questions that you have, and also work with you to get the contracting piece of the puzzle taken care of and moving forward with it. So with that, I want to thank everybody one more time for their time today. Appreciate you joining us, and we'll look forward to working with you again soon. Thanks, everybody. Have a good day.